Today, what next for the faltering housing market? That's our main story. Also this morning, the Aussie dollar and Bitcoin tumble, kids to get the Pfizer vaccine early in the new year, and one of the world's greatest investors says equity markets are crazily overvalued. It's Monday, the 6th of December 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Then stay listening for Sean's chat to Chris Breike from StockSpot about why people should invest in defensive assets. But first, Sean, as I mentioned, what now for the housing market in Australia? It's one of the big questions in financial markets and for homeowners of 2022.
Sure is. No one I've spoken to is talking about as good a year in 2022 as we've had in 2021. Mind you, 12 months ago, no one expected what happened this year either. The market is definitely coming off the boil. We again saw that over the weekend. There were more than 4,100 auctions nationally, according to CoreLogic, and the preliminary national clearance rate fell below 70%. The final rate will be lower than that. Sydney's rate was 67%, its lowest in more than a year. Canberra again performed best, followed by Adelaide and Brisbane. Now, we found out last week that Brisbane and Adelaide are still flying with monthly price rises of 2.5% or more. Canberra and Hobart are strong with monthly growth of 1%. Sydney and Melbourne have come off the boil, though prices are still rising. While in Perth, prices in November rose only slightly and they actually went backwards in Darwin. If the last couple of weeks continues the most recent trends, 2021 will be remembered as the year in which Hobart home prices did best, up around 28%, followed by Brisbane, then Sydney and Canberra, all up around 25%. Adelaide was up about 20%, Melbourne at 16% and Perth at 14%. And that's all according to CoreLogic. For the next 12 months, prices will rise, but at nowhere near the same pace. According to market economists, it seems 5 to 7% is a popular forecast for price increases in 2022. Still pretty good. And if you live in your house, it's tax-free. After tax, it could well be better than the share market, but it ain't as good as 2021.
All right. So how did markets perform on Friday?
Well, the S&P ASX 200 finished Friday up 0.2% to 7,241 points. Energy stocks and banks did best, while healthcare stocks underperformed. There's a fair bit going on at the end of last week. TPG Telecom's share price fell more than 6% after former founder and chair David Teo cut his stake in the telco. He sold about 53 million shares, or 3% of the company, for around $335 million. Not a bad payday for a founder. CSL's share price fell 2.5% on Friday to below $300 a share. That's its lowest point in 4 weeks, after it confirmed it was in talks to buy Swiss-based Viva Pharma Group. And battery metals group Novonix began this financial year with a share price of $2.32. It reached a high on Thursday last week of $12.15. Now that's a jump of about 400% in 5 months. Then on Friday, it fell 33%, having been halted at one point during the day because of the scale of the drop. No announcements. Wouldn't it be interesting to know exactly what's going on there?
Yeah, sure would be. And what's happened on overseas markets, Sean?
Well, there was a big sell-off on Wall Street over the weekend, led by the tech stocks, with the Nasdaq down nearly 2%. Apple was among the biggest losers after reports of weak iPhone sales. The S&P 500 was down 0.8%, hitting a 6-week low. All the debate in the United States at the moment, though, is around when the Federal Reserve will start lifting interest rates. The view is a couple of times next year. European markets were also lower. Where a lot of the interest came late last week, though, was in currency markets. The Aussie dollar fell below 70 US cents for the first time since July last year. It will start this week at 69.9 US cents. The US Fed talking about lifting interest rates, along with the Reserve Bank of Australia's determination to keep rates on hold until 2024, is putting plenty of pressure on the currency. Add in the Omicron fears about global economy slowing, which would hurt demand for commodities, and the local unit is under pressure. That isn't a bad thing. A weaker dollar makes Australia more competitive on the global stage. Of course, it's not so good if you're travelling overseas. Another consideration, which we haven't thought about much previously, is for investors who have put money into overseas assets and haven't insured against exchange rates, otherwise known as hedging. If you've invested at a higher rate and the currency falls, you get a benefit. So, if you invested 6 months ago in US shares, for example, when the Aussie dollar was worth 78 US cents and you didn't hedge your currency risk, even without any change to asset prices, you've already made a 10% return. Also, Michael, Bitcoin fell sharply in recent sessions. It's now trading below 50,000 US dollars a unit, and that's its lowest level in 2 months.
Yeah, big drop, that one. We'll be back in a moment with the rest of the day's business news. Sean, there's plenty of stories around this morning and some great news for families with young kids. Children aged under 12 years old should be able to receive their first COVID-19 vaccine from January after the Pfizer vaccine was given provisional approval by regulators.
Yes, having received the Therapeutic Goods Administration approval yesterday, the vaccine now needs a green light from the Expert Vaccine Advice Panel, but that's expected within a few weeks. Health Minister Greg Hunt hopes to roll out the jab from 10 January. The vaccine, given to children aged 5 to 11, is a third the dose that adults get, and it has a 91% effectiveness rate. Children make up about 20% of the population, so when included in the data, Australia's national vaccine rate is actually at 73%, which is still higher than the developed countries' average of 68%. Globally, the vaccination figure is just 47%, with just 17% of people in poor countries now fully vaccinated. It shows there's still a long way to go, and particularly since the Omicron variant seems to be spreading quickly, albeit with fewer symptoms.
And speaking of COVID, Sean, Parliament House will be closed to the public for the foreseeable future after a staffer for Greens leader Adam Bandt tested positive for coronavirus.
That's right. Senator Bandt has tested negative, but Parliament House will remain closed to the public. Yesterday, Victoria recorded 980 new COVID cases. New South Wales recorded 286 cases, and the ACT 6 cases. There's still plenty around. Also, the number of Omicron variant cases continues to rise, with New South Wales Chief Health Officer Kerry Chant yesterday confirming community infections of the variant in that state.
Now, Sean, the Sown Australia conference was held on Friday. It's one of the biggest conferences for the financial industry in Australia.
It is. It's Australia's preeminent philanthropic and global thought leadership conference, and it brings together fund managers from around the world to present their favourite investments in short presentations. Now, some really serious hitters attend, led by Charlie Munger, Vice Chair of Berkshire Hathaway and Warren Buffett's long-term confidant. If you want some good global stock tips, have a look. Mr. Munger was a headline act. He said Australians should be pretty damn proud of themselves as one of a few countries that had made democracy work. Another was the US. He criticised cryptocurrencies for being investments and praised China for banning them. He said the crypto industry was self-serving and in it for themselves, not customers. Mr. Munger said equity markets were wildly overvalued in some places and things were even crazier than the dot-com boom. He's a fan of President Xi Jinping in China and said Australia would be in a constructive position to encourage China and the US to be more reasonable towards each other. In terms of stock tips, he's a big fan of retailer Costco, which is traded on Wall Street. He's also a supporter of renewable energy, particularly wind and solar power. Really worth going and checking out that conference if you're an investor.
Yeah, not a bad headline act, is it, having Charlie Munger presenting at a conference like that?
Yeah, that's right. He's one of the greats.
It's not bad considering he's 97 years old and clearly still going strong.
Absolutely, and mentally very, very healthy.
Now, the Federal Labor Party unofficially kicked off its election campaign yesterday, and it sounds like we are going to hear the phrase "a better future" many, many times in the next 6 months.
I think so. An election is likely by the middle of May next year, Michael, and yesterday Labor leader Anthony Albanese told the party faithful a Labor government would invest more in renewable energy, free TAFE courses and more university places, and of course cheaper childcare, a favourite of the Labor Party. He said Labor's campaign was about renewal, not revolution, and he attacked the trustworthiness of Prime Minister Scott Morrison. He committed $1.1 billion to make 465,000 TAFE places free and said Labor will fund an extra 20,000 university spots with a focus on areas of skills shortages. Mr. Albanese reiterated his climate announcement on Friday, which included an emissions reduction target of 43% compared to 2005 levels by the end of the decade. Labor would legislate 2030 and 2050 emissions targets. The policy also includes incentives to make electric vehicles cheaper. According to Mr Albanese, it will create 600,000 jobs, mostly in regional Australia, and spur $76 billion in investment. Michael, get ready for a long, long election campaign.
It is going to be a very long 6 months. Okay, Sean, what's making headlines in today's news media?
Well, Michael, Labor is favourite to win the next federal election, according to Newspoll in The Australian. On a two-party preferred basis, Labor is leading the coalition 53 to 47%. But when asked who would win the next poll, 47% of respondents said Labor and 37% said the coalition. Approval for Labor leader Anthony Albanese is now in front of the rating for Prime Minister Scott Morrison. That's the first time that's happened since March last year. And the Financial Review is reporting that the Morrison government says fiscal strategy will move to budget repair after the election and trying to pay down debt and the deficit while keeping the economy growing. Finance Minister Simon Birmingham says that will be akin to walking a tightrope.
Running through some of the other stories around today, the Deputy Prime Minister Barnaby Joyce left over the weekend for a 10-day trip to London and to Washington DC, where he hopes to drum up support to curb the power of social media giants such as Facebook. The government last week said it would legislate to better control the tech companies. Now, Barnaby Joyce is quite an interesting choice to lobby for these changes because he and his family have actually been the subject of some pretty vicious rumours on social media previously. So he's had a lot of first-hand experience of the damage that can be done. While he's there, he's also going to hold a series of meetings about the aviation industry and infrastructure as well.
The BHP board has approved scrapping the miners' dual listing in Australia and the United Kingdom and will create a single listed entity on the ASX next year, subject to shareholder approval. Chief Executive Mike Henry said a unified corporate structure will make BHP simpler and more agile. I think he's probably right.
And Sean, just staying with BHP for a sec, the Fair Work Commission on Friday ruled that the mining giant had breached health and safety obligations by failing to meaningfully consult its workforce at its Mount Arthur coal mine on the COVID-19 vaccine mandate. The landmark ruling is likely to trigger some similar claims, so we'll watch this one. What's the key overseas news this morning?
US Defence Secretary Lloyd Austin over the weekend said the United States will stand up to an increasingly assertive and autocratic China in the Indo-Pacific region, calling its activity disturbing. He said that China's air incursions by fighter jets, bombers and other warplanes near Taiwan looked like rehearsals for military operations. Mr. Austin said the US wanted to strengthen its allegiances in the region. Cases of the Omicron variant continue to filter into countries. There are now more than 40 countries which have recorded cases, primarily in Europe, North America and Southern Africa, as well as Brazil. Globally, there are more than 700,000 cases of COVID-19 of all variants being recorded each day. That's a lot per 24-hour period. So far, more than 5.2 million people have died of the virus since the outbreak nearly 2 years ago. And finally, Michael, remember Donald Trump's social media startup called Truth?
Yes, I do, Sean.
So the former president is launching it to hit back at those platforms that have banned him, namely Twitter, Facebook and YouTube. Well, over the weekend, Trump Media said Truth had raised $1 billion from anonymous funders and will go public. Amazing.
You're kidding. $1 billion.
Incredible, isn't it? He still has many supporters.
He certainly does. Alrighty, up next, Sean, is the Daily Interview, and today you're talking to Chris Breike, the Chief Executive and founder of online investment advisor StockSpot.
Yeah, it was really interesting because at the moment people are talking about investing in stocks that benefit from a rebound in the economy. And this is a little bit contrarian, why you should actually invest in defensive assets right now. And Chris has a really strong view on it.
Yeah, it's a really interesting chat. And also, while you're there, definitely have a listen to The Week Ahead, which is our weekly podcast with our resident economist, Stephen Koukoulas. Plenty to chat about with him.
Yeah, there sure was. It's a big week, always a big week for the economy, particularly when Stephen's talking about it. But he's very excited about the Reserve Bank board meeting tomorrow. Yeah,
absolutely. And, you know, if there's any time left at all, I would highly recommend going and having a listen to the Sunday edition of Fear and Greed. It is a lighter look at business news. And this week, Sean...
I don't think we should be advertising this week's.
Yes, we certainly should, because it features your story of meeting one of the biggest celebrities in the world and making a complete fool of yourself.
Yeah. If you have to miss that, listeners, that's fine by me.
That's the Sunday edition. You'll find that in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Monday, the 6th of December 2021. Remember to hit follow on the podcast and find us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.